Hi, everybody. This is Tony Nash with Complete Intelligence. Thanks for joining us for another quick hit. Today, we're speaking with JP Barrick of Aurum Capital Ventures. JP, thanks for joining us. Can you tell us a little bit about kind of what you do and what Aurum Capital Ventures does?
Yeah, so I've gotten into the cryptocurrency space back in 2013. And since then, I've built multiple companies that have now become Aurum Capital Ventures. And Aurum Capital Ventures is a company that's focused on using stranded energy to mine cryptocurrency and other digital currencies and building yield generation or building a way to generate yield through the mining process for consumers and for institutional investors.
Okay, very interesting. So I want to go into a couple things about cryptocurrency, but first, I want to ask, what is stranded energy?
Sure. So stranded energy is energy that is either not accessible to the grid, so it can't connect to the standard power grid, or energy that's been built up in areas where the federal what are they subsidies for wind and solar farms have basically built this infrastructure that wasn't needed in one area, but it was built there because of those subsidies. And in return, the power prices are actually going negative during the night because there's oversupply and not enough demand. So that's where we target when we build out mining sites.
Very interesting. Okay, thanks, JP. So let me ask you this, just in terms of some crypto basics. Okay, is cryptocurrency, is it an asset or is it a currency? And so by that, gold is an asset, right? You can't really go to 7-Eleven and spend gold. Dollar's a currency. You can go to 7-Eleven and spend a dollar. So is cryptocurrency, is it an asset? Is it a currency? Is it both? Is it moving from one to another? How do you think of it?
Yeah, the more I look and think about Bitcoin, is the more I think it's actually an asset less than a currency. I've used Bitcoin to buy laptops that, 12 Bitcoins for a laptop, and then you realize that's worth more than a house eventually. So I think the Bitcoin as an asset is really how I view it. It's a way to store value digitally that can easily be separated and transferred anywhere in the world. And it's an asset that we know there's a finite supply of it. We know how much there's going to be, how many new Bitcoins there are going to be every day for the next 100 years. And that's something you can't really get with, I would say, many other assets. The reason why I don't think it's a currency is because we've seen other people have built on the Bitcoin blockchain and built on top of it as a way to build stable coins or other ways to transact, which are just more efficient and don't have the price fluctuations that you do with using Bitcoin as a medium of exchange.
Okay. So one of the things I'm really puzzled about with Bitcoin is, normally with software, it's the newer versions that are more desirable and more valuable. Okay. Bitcoin is kind of the, Windows 3.1 or something like that. I mean, it's the OG of cryptocurrencies, right? So why is Bitcoin more desirable and valuable than other coins?
So, in my opinion, it really comes down to first the miners. The miners are the ones who are allocating the most amount of capital in this space, who are taking the risk to capture this Bitcoin, and you have to put that capital up millions of dollars when they're building out the infrastructure before they even see return. So, because the miners are centrally focused around Bitcoin, it's the top currency for miners. I've seen that network effect has really grown Bitcoin to keep its position and its power. The amount of computing power protecting the Bitcoin network is 10 times, if not 100 times more than any of the other networks out there. That would, I would say, the first thing. The second thing is the on-ramps. To use a digital currency like Bitcoin, we need on-ramps that have been put together over the past 10 years and have been focused solely on building on-ramps for this cryptocurrency. Bitcoin works in the way, and it functions as that secured and digital store of value. Other
Mhm.
currencies have tried to do that, but the reason why it's a store of value goes back to my first point, which is the miners spending all that capital and infrastructure to secure the network using that energy on a day-to-day basis and giving Bitcoin that floor price.
Okay, so when you say on-ramps, what do you mean? So if I have a new coin, I need to have a way to be able to mine it and distribute it. Is that what you're talking about?
When I was referring to on-ramps, I was actually referring to fiat on-ramps. So basically, how does fiat currency come into the space? So US
Right,
dollars, euros, Japanese yen, how do they
right.
come into the space? And then from there, how does that get turned into this digital currency?
Okay.
Those are on-ramps. Then also custody solutions, insurance,
Oh, right. Okay.
all of that being the
Interesting.
on-ramps.
Okay, very good. Okay, so also in terms of crypto, what I'm really interested also is um, uh, when I look at the current environment, we're in the wake of an election in the U.S. It's a little bit uncertain. We're in the wake of COVID. There's a lot of uncertainty. You know, is there kind of an optimal, say, environment for cryptocurrencies? Do we see, say, confidence in traditional currencies waning and people moving to cryptocurrencies? Is it an either or world, or is it both? And what does that environment look like for people to turn their attention to cryptocurrencies?
The Europeans and the US, they're absolutely Mexico.
So I think the as you mentioned, the two different type of pandemic, the COVID pandemic and the election, has really pushed crypto to the forefront as another asset class as a safe haven. I don't think cryptocurrency necessarily follows the same S&P 500 or other type of cycles out there when it comes to the economics and social cycles. Bitcoin to me really follows the halving events, which happen every 4 years, and so that in my mind is what brings the momentum required to push Bitcoin to a new price. And in those halving events is when Bitcoin miners receive half of the amount of Bitcoins they were getting every day, just simply because it's past the 4 years and the issuance schedule is set. So as I mentioned, we'll know exactly how many coins are coming out. That, in my opinion, is what creates these price rises about every 4 years, which then drives new interest to Bitcoin, which then drives more speculation, and which then drives the community growing at massive scale and then shrinking because the people that are just speculators, just coming in to make a quick buck, they make their quick buck or they lose a lot of money. But the people who then now start to understand the technology and understand how much better of a monetary system it is, because it empowers the user. It provides them a steady base that they can build their life on, a steady base currency that they know is not going to be inflated away, and then they know is going to retain its value over the long period of time.
Okay. And so when you talk about halving events, what happens around those halving events in terms of, say, processing power, in terms of the computing requirements? Are there cycles to build up more equipment and less as it ages? And what does that look like?
So right now, the cycle, definitely there are cycles to build up equipment. And in May, when was that halving event occurred, the amount of machines came down by about 15%, 20%, and those machines were turned off because they were just older generation. The newer machines are coming in line, they're being deployed, but we see it as in, if you want to get into Bitcoin mining, the 2 years after the halving event are the best time to get in, because as I mentioned, that momentum will start to build up. The Bitcoin price will continue to rise. You'll have a great 2 years of profitability, and you'll be very, very profitable, and there'll be a big arbitrage there. But then as Bitcoin price rises to an extreme height, there's not enough actual Bitcoin miners available for everyone to buy and acquire. We don't have enough semiconductors. And so what happens is the value of those machines will rise rapidly, and the people that are just coming into the space that are new are trying to pick them up and grab them and buying these machines for really top dollar. The problem is that Bitcoin price will crash, but you still have new machines on order for maybe 6 or 9 months out. Those machines will continue to come online. They'll continue to run until it squeezes the profitability of all the miners, and then you see a crash in difficulty, usually in correlation as the Bitcoin price is continuing to push down back to a normalized, area, and not in the $100,000 ranges, or
Right.
really overvalued where we see it once it kind of starts that on ramp.
Okay. So when you say there's hardware replacement after the halving event, so my understanding is this: you're getting half the amount of Bitcoin for doing the same amount of work. You have old equipment. It's utilizing the same energy it did at double the price. So you have to cycle out that old equipment so you can still be profitable in your Bitcoin mining. Does Does
That's
that make sense?
exactly right. That's exactly right. We
Okay.
either cycle the equipment or we move to lower cost power, about half the cost, in order to stay competitive. Those machines aren't necessarily going to immediately become unprofitable after the halving, but they will become unprofitable very quickly after the halving. And now, because Bitcoin price has risen, those machines you actually could turn back on and make a few pennies depending on what your power
Okay.
rates are.
And so, since it's so equipment intensive, and we had supply chains bottleneck through COVID out of Asia, what has that done to the Bitcoin mining environment? Has Bitcoin risen in price as a result of it, or are people using less efficient machines and maybe losing money or coming close to losing money on mining? What's happening as a result of the supply chain issues that we saw out of Asia earlier this year? And also, is there still kind of pent up demand for that equipment?
Yeah, so right now, with COVID and the supply chain issues that have occurred, the machines got backed up, the factories had to close, and so those orders that were maybe supposed to deliver in December of this year aren't going to deliver until January or February. So they have been backed up by 2 months. Also, due to 5G and the new phones coming out, the amount of chip production capacity that is allocated to Bitcoin miners from the fabrication facilities like TSMC, that has gone down as well, and they're not able to get as many chips as they would like. Right now, if you're buying miners and you're doing a project like we're looking to do one in Oklahoma, to buy 50 megawatts worth of miners or 15,000 machines, it's going to take us about 4 months to acquire those machines and get them delivered to the United States in multiple batches. So that's the expected timeline to wait for these newer machines. But as they do ship from Bitmain and from the manufacturers, we expect that hash rate to continue to grow. And as Bitcoin price grows faster, it's going to create more demand, and it's that vicious cycle.
Interesting. Okay. So as you look out at the next year, are there certain things you're looking for? Like, are there coins that you're interested in? Are there, where is your attention going? And what do you see over the next, say, 6 months in the cryptocurrency environment?
So over the next 6 months, I'm really focused on Bitcoin particularly, but I do think decentralized finance, so DeFi, has a lot of opportunity. There's a lot of very cool projects. One of them being a token called Lend token, LEND, and that token has something called a flash loan. And what flash loans are is they're the concept that liquidity is no longer an issue for anyone that can prove there's an arbitrage opportunity in the market. And so when these Ethereum contracts are written, they basically have to balance the price points. And if the prices start to become a little bit off, someone can go in and balance that contract and take the reward for balancing that contract. Before, you might have to put up the capital yourself to do these balances so that you can make the profits from balancing this contract and getting that arbitrage there. No longer do you need to do that with protocols like Lend, which are really trying to decentralize the credit problem, decentralize what does credit look like on the blockchain? How do we give credit to companies? How do we ensure that we can lend to them without necessarily having to verify everything and do the verification process we have currently? But how do we do that on chain in a contract? So protocols like that are what I'm really focused on. I think decentralized finance is going to blow up. I think it'll be the next ICO hype, as we would say in 2016,
Okay.
2017. There'll be good projects, and there'll be projects like we saw with Sushi that the developer just ran away with the funds because the contracts weren't audited. That's another big thing. If you're investing in a project or if you're investing in anything, you want to make sure that it's backed by VC companies in the United States that are these very popular VC companies in China and Europe, or that it's been audited by reputable sources in the community.
Great. Okay. JP, thanks so much for your time today. I know you've got a lot going on, so thanks so much for joining us and talking about this. Really appreciate this. Wish you all the best over the next 6 months as all those things come to pass. I also want to thank our viewers and remind you, please subscribe to our YouTube page. Please subscribe to our newsletter. Both are in the footer of the video. Thanks very much.